Welcome to Talk Tickers. Today, we're breaking down First Horizon's Q4 earnings. They just wrapped up a really strong year, but the big question is, what does this mean for the stock in 2026, especially with all the headwinds facing the entire banking sector? Let's dive in. All right, so right out of the gate, we've got a clear beat on earnings per share. First Horizon reported 53 cents, which was a solid 6 cents above what the street was looking for. That's a great signal to kick things off. And, the market really sat up and took notice. The stock reacted well, closing up over 1.5%. But here's the kicker. Look at the volume. It was nearly double the average. That tells you investors weren't just watching. They were actively buying into this positive story. So yeah, this reaction was all about those strong results, beating on both the top and bottom lines. It was a fantastic way to cap off 2025 and really sets a positive tone for the year to come. And it wasn't just about the earnings. If you look at the top line, First Horizon also delivered a solid revenue beat. They brought in $892 million, which was a full $28 million ahead of expectations. I mean, it was just a really strong quarter all around. So what's the core narrative here? What's really driving these results? Well, when you look inside the numbers, it really comes down to one thing. First Horizon's aggressive and, more importantly, consistent strategy of returning capital to shareholders. For the full year, the company returned almost $1.2 billion. And this chart just says it all, doesn't it? Their priority is crystal clear. Share buybacks made up the huge majority of that total, coming in at nearly $900 million. And they are not slowing down one bit. The board just gave the green light to a new $1.2 billion buyback program, and there's still about $1 billion left to go. Now, this isn't just a one-off thing. It's a powerful signal from management that they believe their own stock is a great investment. Now, beyond that great capital return story, the underlying bank is just humming along. You're seeing healthy loan growth, and the credit quality is incredibly stable. That net charge-off ratio of just 19 basis points, that's tiny, shows they're growing without taking on a bunch of bad risk. Plus, they showed amazing discipline on their deposit costs. And they're doing all of this while keeping a super strong capital position. That CET1 ratio of over 10.5%, that's a key measure of how well a bank can handle financial stress. And that is a very healthy number. Okay, so the numbers look great, but what's the plan for 2026? Let's take a look at what management had to say. This is their playbook. The CEO, Brian Jordan, really set a tone of confident resilience. He's basically saying that their business is built to perform well no matter what the economy throws at them. In this kind of environment, that's exactly the message of stability investors want to hear. And hey, they're not just talking a big game. Management put some real numbers behind that confidence. They're guiding to 3 to 7% revenue growth in 2026. This gives investors a clear, tangible roadmap for the year, and it helps take some of the guesswork out of the equation. And their plan to get there? It's refreshingly simple, and that's a good thing. It's all about solid execution. 1, grow profitable relationships. 2, keep a tight lid on expenses. 3, hit their financial targets. And 4, keep that capital flowing back to shareholders. It's a straightforward plan investors can easily track. Now, to really appreciate what First Horizon is doing, you have to put it in context. We need to see how it's stacking up against the rest of the regional banking sector, which, let's be honest, has faced its share of challenges. And wow, this slide right here is the whole story. First Horizon isn't just doing well in a vacuum, they are crushing their peers. Just look at the 3-month return. FHN is up over 17%, while the broader regional bank ETF is up just 10%. That massive gap tells you that the market sees something special in this company. This outperformance is even more impressive when you think about the storm clouds over the entire sector. I'm talking about fierce competition for deposits, growing worries about credit, especially in commercial real estate, and, of course, the constant uncertainty around what the Fed is going to do with interest rates. So, this brings us to the big question for any investor, right? You've got a clear leader, but it's in a pretty challenged sector. How do you position yourself to capture that strength while still respecting the risks out there? What's the trade? All right, let's get to it. What's our take? Based on everything we've seen, we're ready to make the call. We're initiating coverage on First Horizon with an outperform rating. Their execution has been fantastic, their growth is disciplined, and their focus on shareholders is just undeniable. We think this is a story that's going to continue to stand out from the pack. But in this environment, just buying the stock might not be the smartest move. That's why our actionable idea is a pairs trade.
Now, if you're not familiar, a pairs trade is where you go long one stock and short another related thing, in this case, the whole sector. The idea is to capture the outperformance of the one company while hedging against the risks facing the industry.
So here's how it would work. You go long first horizon to capture all those company-specific strengths we've been talking about. At the same time, you'd short the KRE Regional Bank ETF. This part of the trade acts like insurance, aiming to neutralize those broad market risks. The goal here is to isolate FHN's outperformance, so you can make money as long as it keeps beating its peers, no matter which way the overall sector goes. So, to wrap it all up, First Horizon is a clear leader in a tough sector with a proven track record and a deep commitment to its shareholders. And that's our take on their Q4 earnings. This is not financial advice.